Ladies and gentlemen, good day and welcome to the Q1 FY2023 earnings conference call of DCW Ltd, hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of DCW Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Satwik Jain, President, Ms. Amitabh Gupta, CEO, and Mr. Sudarshan Ganpati, COO, and Mr. Pradipta Mukherjee, CFO. Without any further delay, I request Mr. Satwik Jain to start with his opening remarks. Thank you, and over to you, Satwik.
Thanks, Anuj. Good evening, everyone, and welcome to DCW's earnings call to discuss the Q1 FY2024 performance. We will start today's call with a brief on the industry dynamics and then move into the company's performance for the current quarter. As you all may be already aware, the chemical industry is going through an extremely volatile and challenging phase. With China's economy opening up, it has resulted in excessive competition, higher supplies, and resultant decline in realizations. Global chemical demand has also been disrupted due to economic slowdowns in Europe and the US. While domestic demand has remained resilient, the surge in dumping by Chinese exporters has intensified competition and impacted Indian manufacturers' performance. Our Q1 FY2024 financial performance has declined significantly both on a year-on-year and quarter-on-quarter basis, primarily driven by price erosion across all commodity product segments and volumes on some of our specialty products, resulting in overall margin and revenue contraction. Actually, the sales volumes witness a reduction across all product segments except CPVC. This will be detailed out by our CFO later on in the call. I will now talk a bit on each of our products. Starting with soda ash, the production was down on account of machinery breakdown and is presently being operated at around 75% capacity with a stopgap arrangement. The replacement of the equipment part is expected in the month of September, with full production to resume from October onwards. It is important to note that soda ash prices have further dropped by 12% from the Q1 prices due to abundant availability of imported product. The caustic soda plant is being operated at around 85% of its capacity on account of sharp fall in net realizations. Export demand is still showing weakness and is expected to stay the same for at least another quarter or so. The sluggish export demand for synthetic rutile and SIOP also have resulted in lower sales. However, the production has been maintained, resulting in inventory buildup of the finished goods. The weak export demand environment for these products was due to inventory destocking by our customers and falling prices as well, though on-the-ground consumption of our products still remains strong and similar levels to last year. The PVC business segment, which contributes a major share of our revenues, the prices have dropped continuously over the last 7 quarters, and we believe that they have bottomed out at these levels. VCM prices have also corrected, but only towards the end of the first quarter. Also, on the cost front, coal prices have corrected significantly. The benefits of this should be seen from the next quarter onwards. Now coming to an update on our growth capex. The CPVC project is mechanically complete and is expected to be commissioned by the beginning of September, with the capacity ramping up slowly. The project turnaround time has been significantly better than our initial expectations, and we expect this to commercialize soon enough. As far as SIOP goes, the additional production should start by October, November, with commercial volumes coming up with a lag effect post the customer validations. All in all, the prices across our product range have bottomed out. However, we feel that the softness will continue into the current quarter, with export demand picking up in the second half of the year. While the broader markets roller coaster up and down, we continue our efforts to bring in efficiencies and innovation by exploring new technologies in our manufacturing processes, and are also looking to reduce our carbon footprint using alternate sources of energy. With that, I now request our CFO, Mr. Pradipto Mukherjee, to brief you on our financial performance. Over to you, Pradipto.
Thank you, Satvik, and good evening, everyone. The quarter one revenues for the company stood at 438 crores as against 588 crores in March quarter and 768 crores in quarter one of last year. The quarter on quarter, the revenues were down by 25%, mainly on account of price correction, 9% in PVC and 5% in caustic and soda ash. The specialty segment prices more or less held up. On the volume front, there has been a dip across the segments and products except for CPVC. The drop in volumes for caustic has been to the tune of 20% in the quarter, 8% in PVC, and soda ash by 30%. In case of caustic, the company chose to operate at a capacity of 85% due to significant price erosion. And so far as soda ash is concerned, for the quarter, unfortunately, we had a shutdown in the plant because of mechanical breakdown of one of our machine, and the productions were shut for 16 straight days, which resulted in lower sales. Additionally, in soda ash, we also witnessed sluggishness in demand in the second half of June, resulting in some minor inventory build-up. The demand continues for soda ash. The demand continues to be weak, and there has been a further price correction as in the ongoing quarter by 12%. The company further witnessed a demand reduction in our export products, namely SIOP and SR, wherein there has been a volume contraction of 35% quarter on quarter. However, the company expects the demand situation for the export products to gradually ease off and has continued production at capacity, resulting in inventory build-up in both SIOP and SR. On a year-on-year comparative, the revenues were down 43%, since in addition to what factors which we earlier mentioned, there has also been a price erosion for caustic and PVC, which were even more steeper to the tune of 35%. Coming to the second segment, which is the EBITDA. The EBITDA for the company stood at 55 crores for the quarter as against 103 crores in March quarter, lower by 45%, and 124 crores was the EBITDA in quarter one of last year. This number is lower by 55%. On a quarter-on-quarter, impact in the bottom line has mainly been triggered by lower sales in our export products, namely SIOP and SR, where we witnessed demand sluggishness. Additionally, the loss of production and consequent sales volumes in soda ash for the quarter also resulted in reduction in the bottom line. These three segments put together, which is SIOP, SR, and soda ash, the EBITDA took a hit of around 26% on quarter-on-quarter basis. The other factors which were prevalent in the quarter was price correction in caustic, as earlier mentioned, with no meaningful improvement in the cost structure. Further, PVC correction of 9% resulted in continued loss in the PVC division, and the inventory losses were factored in the EBITDA. The CPVC segment had witnessed a strong volume uptake, but that did not result into incremental profits as there were some price corrections in this segment. On a year-on-year basis, the additional impact has come from caustic division, wherein the price corrections of caustic lye and synthetic rutile were steeper. The caustic price corrections, as mentioned, was 35%, and SR price corrections has been to the tune of 32% on a year-on-year basis. The silver lining, however, for the quarter has been that we have witnessed a lower energy cost due to coal price correction, which has started kicking in from the month of June itself. The EBITDA margin for the quarter stood at 12.5% as against 17% for the last quarter and 16% for quarter one of last year. In the finance cost, the interest cost have dipped to 17 crores, a significant reduction over quarter one of last year, which was 25.5 crore, and over last quarter as well, which was 19 crores. And this interest cost is going to go lower as we go on making our debt repayments. Further, on the income side, other income side, which included in the above EBITDA, we have earned an interest of around 3.5 crores on the funds which are maintained with us and investing them. With this, I think we can open the house for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on your touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Anil Shah from Aditya Birla Mutual Fund. Please go ahead.
Yeah, hi. Am I audible?
Yes, please go ahead.
Yeah. No, my question was, what are the repayments scheduled for this particular year?
Our debt repayment?
Yeah.
Yeah, so the debt repayment is to the tune of 125 crores for the full year.
Okay, and we plan to repay this and not refinance it. Is that correct?
Yeah.
And that means that by the end of the year, where do you see our debt, long-term and short-term combined debt?
So our total debt as on 31st of March was around 504 crores. The scheduled repayment comes to around 125 crores. So we are looking at a number of 380 odd by the year end.
By the year end. Okay. And after this capex, which we have done for both the CPVC and SIOP, is there anything more that we are looking to do in terms of capex this year and next year? What are our capex targets for this year and next year, please?
So I think this year, as we announced, we are ongoing our announcement of 125 crores of capex in doubling of CPVC and debottlenecking of the SIOP. That would be done and dusted. Commissioning of both this facility would be done by September itself, as was announced. We expect commercialization of the CPVC plant from September itself, as has been earlier mentioned. The SIOP business, however, will see the volumes coming in with a lag of 6 months. That has been our expectation. So from FY25, early 25, we will start seeing the volumes. So far as our investment plan for next year is concerned, we have certain capex identified, but however, we will see how quickly we can start those capexes depending upon how our quarters and cash flows shape up as we go through this difficult times.
Okay. And my last question, sir, is generally on the caustic side, and the PVC side, do we think we hit the bottom in terms of pricing and demand and volumes? And well, I understand you said the pickup in demand will happen from second half, but there is a Q2 yet to come through. So do we see things getting better on the Q2 front?
So I have our business heads to discuss on this, but generally what we have seen as a history is that PVC and caustic prices are somewhere inversely correlated. Not directly, but inversely. Unfortunately, for quarter one, we saw both the prices languishing. This situation we expect will not continue for a longer period of time. We, however, don't know which product will unlock and what the prices would be in a quarter from now. But our internal anticipation is that the PVC prices will firm up first before the caustic prices. With this, I'll ask our CEO, Mr. Ganpati, and Mr. Amitabh, our CEO, to talk on this.
Yeah, I think further to add to what Mr. Padukta has told, PVC prices have definitely bottomed out, and we are also witnessing a robust demand despite the monsoon, which is a very positive factor. And even the caustic soda prices have nearly bottomed out, and I don't foresee any further price reduction possible on caustic soda at this juncture.
Okay, thank you. I'll do questions.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Yash Agrawal from JM Financial. Please go ahead.
Hello. Yeah, hi. Good evening, sir. I had a question on the SIOP division. So I think there's been a sharp fall in revenue despite the production remaining broadly, I think, flat QOQ and YY. So, what sort of inventory build-up have we had, or is this a function of decline in realization? Is the first thing I wanted to understand.
So SIOP, typically, we started this year, when we started the last year, we were doing around 30-35 tons per day. We ramped it up to 60 tons, and now we are at around 70 tons per day. So while the production has gone up, as the nature of the business, we are parallelly trying to tie up the volumes with our additional customers. Typically, the focus for the marketing team has been into the domestic market, where we will make our new inroads. Having said that, as the productions are increasing, and our export sales, as I told, has been a bit lower for the quarter, there has been certain inventory built up in SIOP. But for the business as a whole, I think our CEO, Mr. Amitabh Gupta, would throw some more light.
Yeah, good afternoon, everybody.
Yeah.
Good afternoon. You see, SIOP is a little different product as compared to caustic soda, PVC. It is not a commodity per se. Practically, each and every customer has a little variant of what they are using, because this is not a standard product. We call it red and yellow, but then there are about maybe some 50 or 100 shades of red, similarly of yellow. So the process is, till such time you start producing, you cannot get your product validated by the customer. So we have ramped up our production. We have got a very good response from our overseas buyers, and they have already committed substantial volume from October, November onwards. Like in the local market, our product has been well accepted by big consumers like Asian Paints, JSW, Indigo. Okay. So now the process, we have embarked on the process of the samples are being submitted to these other customers. Once we get the approval, then the sales will pick up. And the response is pretty good. Already Asian Paints has started buying, JSW has started buying from us. And we are planning to introduce a finer variety of this product, which is a micronized product, which will further increase our sales. So I think in another 6-8 months' time, we will be more or less producing we will be more or less selling our current production. And in this business, the inventory has to be built up because the customer, whenever they want the product, it has to be given then and there only. Nobody will wait. So inventory of about 4,000 to 5,000 tons will always be there. And I think, I'm sure in another 6 months' time, everything would have been streamlined because the product has been very well accepted by all the major customers.
So what sort of quarterly revenue run rate from the SIOP division do you see?
Pradipto, can you just throw some light?
So our SIOP business roughly has a 35% margin, and our profits roughly would be around 10 crore rupees EBITDA for a quarter. This is at a 4,500 tons kind of a dispatch for a quarter. Okay, so
10 crore you mentioned.
We are looking at a number of 6,000 for a quarter, as sir told, somewhere from next year onwards. So that eventually will not only increase the margins, we are expecting the margins to go north of 37% because of economies of scale. This is a power intensive production line as well. So we see benefits of cost over there. And obviously, as we do the micronization, which will call for some amount of investments, which is a part of the project plus, part of the project which has been announced, that obviously would fetch additional margin because micronized products have 25 to 30% pricing power available with the company. So these are the brighter sides, but to tie up these would take a 6 to 8 months time.
Also, clarification, you mentioned 10 crore EBITDA quarterly currently, and from next year when it touches 6,000 ton, how much would be the quarterly number in your estimate?
So around 20 crores of EBITDA is what we are anticipating at a quarterly level or an annual level at 80 crore.
Okay, got it. Fair enough. That answers my first question. My second question is, you mentioned that, you got some benefit of energy prices cooling down in the first quarter.
Yeah.
Now, has that benefit completely been factored in the first quarter results, or there is more to come?
I think last 15-20 days is where we had the benefit, where we have had the benefit of the coal prices because of the newer inventory coming in, and those will have a full benefit coming in quarter two.
Oh, is there any estimate you could give, absolute amount of benefit?
I think what we estimate, it could be around 7.5 to 10 crores of additional power cost savings over and above quarter one numbers.
Okay. Thank you so much. That answers all my questions. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Nishit Deepak Jain from SNJ Investments. Please go ahead.
I just want to know, is it right to assume quarter two can be better than quarter one, especially on PVC and CPVC side?
So, if you're talking on EBITDA number, I think
Yes.
There are a couple of moving parts so far as the company is positioned now. So typically what the company expects that after 7 consecutive quarters of price drop, the PVC will, show price increase, which obviously we have witnessed 1 round or 2 rounds in the month of July. There is benefits of coal prices which will get baked in. The CPVC productions, we are expecting to see some part of it in September itself. These are the upsides. On the downsides, as our market for SIOP still is exports, we are not very confident about what would be the uptake of SIOP and SR in quarter two. Similarly, if you've seen our communication, soda ash plant has started operating at a 75% capacity through a stopgap arrangement. There would be a shutdown most likely which will be taken in quarter two to revamp the equipment for a couple of days. And also, there is a 12% price drop in Q2. As of now, what we are aware of in soda ash, with inventories across all the domestic players struggling to be sold into the market. So given such a situation, a number to be given would be difficult. But on a longer term, what we as an organization are trying to do is ensuring sustenance by way of producing and selling at our capacity and parallelly building capacities for CPVC and SIOP.
Okay, and follow up on this, as we assume, like the VCM cost will definitely be lower for your imports of May, June, July, and in return, the PVC prices, as you said, there has been seen some increase in July, and definitely in August also it may be. So that effect, at least on PVC and CPVC, the EBITDA should be better, right?
Yes, you're right.
Any guidance?
CPVC is where we are relatively confident that it would be better compared to Q1. What we are not confident is on the soda ash piece, because there are our competitors into the domestic players who are struggling to find their product into the market at even current prices. And on top of it, we are operating at 75-80% capacity. So soda ash is something where we expect a dip. PVC and CPVC is where we expect increase. Caustic, obviously, caustic division as a profit will predominantly be dependent on how our synthetic rutile uptake happens for the export market, where we are a bit skeptical. SIOP, I think, would be more or less the same or a bit better than what we have done in Q1. Okay. So all put together, the numbers would not look very encouraging to what we have reported EBITDA this quarter. But what we are hopeful is that from H2 onwards, we see a good change, because first of all, we will have the additional volumes in the market so far as CPVC is concerned. That's an additional advantage. And we think that the soda ash problem for us, internal problem, which is basically production, we will be able to do away with. It will be only a marketing which we need to address for soda ash. These two are positive things which we are, hopeful of. And based on what order insight we have from SIOP, we think that there will be some increase in volumes in SIOP, which will add to the bottom line.
Okay, and then lastly, can you give any guidance for PVC, CPVC, EBITDA, Q2?
So, Q2 guidance specifically to put in would be difficult. We have closed this quarter, I think, at a 6 crore of EBITDA loss. It would be obviously north of 5-6 crores so far as PVC is concerned. CPVC, we have done an EBITDA this quarter of around 15.5 crores. We think we are targeting a 20 crore kind of a number.
Okay, that will be helpful. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah.
I'm sorry to interrupt. Your audio is fluctuating.
We are not able to hear you.
Audible?
No. Your voice is a bit breaking, sir.
Is it better now?
Yes, it's better.
One thing I want to ask on this caustic soda division side, I think the synthetic rutile product is also there. So how we should differentiate the capacity in that, and what would be the pricing difference between normal caustic soda and this synthetic rutile product?
No, I think your question is not clear to us, sir. Can you please repeat it?
Just a moment, sir. Is it better now?
Yeah, tell me.
Yeah. So in this caustic division side, just wanted to understand as the pricing difference between a normal caustic soda and synthetic rutile product, and the overall capacity which we report in caustic soda somewhere 96,000. How much of that is for the synthetic rutile?
So on synthetic rutile and caustic basically are not a comparative product, while caustic lye is basically a commodity which is price sensitive. Synthetic rutile is typically a specialty kind of a product for us. It's subsumed in the division itself. The prices for SR would be to the tune of 1,10,000 rupees a ton, and caustic soda, as you know, it's available in the public domain. It's around 33,000. Our capacity for caustic is 1 lakh ton. Our capacity for SR is 40,000 tons.
Okay. So combined capacity for caustic would be 1,40,000, right?
Yeah, we don't see it that way. Yeah, please.
Yeah.
No. It is not combined capacity. The capacity of caustic soda remains 100,000 tons, and synthetic rutile is a separate product. It is not interchangeable at all. You see, one of the co-products from caustic soda, that is hydrochloric acid, is being used to produce synthetic rutile. Okay? So these are two different products altogether.
Okay. And the end use of the synthetic rutile is same, or that kind of a replacement?
Rutile is in manufacture of titanium metal and titanium dioxide pigment, which is used mostly in the paint industry.
Okay, got it. Thank you. And secondly, on the energy side, as you were saying that coal prices are reducing and most of the benefit would be reflecting on Q2. Just wanted to understand, are we looking at renewable energy also as an option apart from this coal, and any thoughts on that when would be coming there?
Satvik, would you throw some light on this, please?
So, as I mentioned, we are looking at various options for alternate energy, and once that's concluded, we will communicate on that.
Okay. So as of now, it is all coal-based for us.
Yes, as of now, we are coal-based.
Okay, got it. On this capex side, as I think you have indicated about 125 crore kind of capex is there for FY25. So this would be for FY24, I guess, right? And FY25 is and FY25 is yet to be, you can say, decided or looking at the opportunity based on the market condition.
The project identification more or less has been done by the strategy team. It is about balancing our funds versus when to start. So the question is not whether we will do capex or not. Obviously, we will do capex. However, the question is that from what time we start it, so that we don't bloat our debt.
Okay, got it. And one last question on this margin side, as if we look at our margin last 2-3 years, it has never gone below, I think, 10%. And in this current scenario, when most of the companies are reporting much lower margins, still I think we have maintained a decent sort of margin. So going forward, when we are talking about this bottoming out kind of situation, maybe from Q3 onwards, what kind of margin improvement we should be looking at, and with this SIOP contribution increasing going forward, what best level kind of margin we should be expecting for 24 or maybe 25 going forward?
See, typically our margins, we are typically a 5-product kind of a company put together. We cannot be singled out and compared with any single company. So what happens is our margin would be a function of the mix. Okay? So what we have announced our capex is predominantly into the specialty segment, which is CPVC and SIOP. what we see is that we are maintaining a margin of 35% for SIOP even at this level. And CPVC margin we are expected to have at around 30-35%. As and when we see the full production and the sale of this product into the market, we think that this investment, which is almost behind us, at a full steady state would give us a margin somewhere at around 20-22%, given that all other business holds out at the present level.
Okay. Thank you, sir. Best of luck for future. And if any question, I will come back in queue. Thank you.
Thank you. We have the next question from the line of Nikunj Raj, an investor. Please go ahead.
Thank you for the opportunity. I would like to know, in terms of the CPVC resin, the CPVC sales, how much would be the compound and how much would be the resin?
It's a dynamic mix because based on the order books, it has been as high as 60% resin and 40% compound to as low as 20-25% compound and 75% resin. So there is no benchmark, but our endeavor is to sell more of the compound where we have a better value add.
So that will be, this proportion would be in the same range even after the expansion, right?
Most probably, yes.
Okay. And in terms of the technology that we have selected for the expansion thing, is it the same that we had the previous one, or it's a new technology?
It's not the same technology. It's a modified technology. So we have taken an external help for some phase to set up a pilot plant, and post that it is our own improvements that we have made.
Okay. So then will we take time to stabilize the plant, because again it will be a new thing for us compared to what we had already?
Don't foresee a big challenge because we had a certain round of validation of the product which we got from our pilot plant. So we don't anticipate a big challenge in getting the product validated. But we have to cross the bridge. So, we have to wait and see how is the response. But we don't foresee any big challenge.
Okay. And in terms of the PVC that we manufacture, so do we consume the captive PVC for the CPVC, or do we get it from the market?
Partly, depending on the economics again. So we will have this advantage of either using our own PVC or we buy the bottled PVC based on the economics.
Okay. So it's not about the quality, it's more about how it makes sense in terms of the financials, right?
As you know, PVC is a product which is in short supply because India is 55% import dependent. So barring this last couple of years where we have had a sudden dip in the PVC fortunes, this is predominantly linked to the Chinese oversupply and lack of domestic demand. So personally, as a company, we feel that PVC will remain a product which will be a high revenue and a reasonably good profit margin for us. So, as far as possible, our aim is to maintain our market share by producing the PVC for sales and try to use bottled PVC for our CPVC plant. But having said that, it is not a hard and fast rule. Depending on the dynamics and the situation, we can always interchange.
Right. And in terms of the CPVC, again, as you said that your endeavor is to sell the compound more than the resin, so that will be the future when we expand. I guess that can be the criteria in terms of expansion, because I guess for compounding you will need, is it done from the same capacity or we need some extra kind of?
As of now, we have idle capacity available. So our first aim is to see that our compounding capacity is run to the full capacity.
Okay.
I think at least for the near future, we will have capacity available. Going forward, if we are getting a reasonably good response, then maybe we can add up the compounding facility. It's not a big challenge.
Okay. Just one last question. In terms of the chlorine consumption, how much would be the captive and how much you would be selling in the market?
As of now, we will be consuming almost 65 to 70% and based on what future capex that we have proposed, maybe in about a year or year and a half time, we will be 100% consuming the entire chlorine captive.
Okay. Does this include the pipeline customers or it's fully in-house?
Fully in-house.
Fully in-house. Okay. Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Guneet Singh from CCIPL. Please go ahead.
Hello. Hi, sir. Thank you for this opportunity. So I just want to understand about the margins. You mentioned that prices across all the products have gone down, but our margins have still maintained at the 16% level annually, and these are historically amongst the highest margins that we've achieved. So, I just want to understand, now that all the prices have bottomed out, what kind of margins can we expect going forward? And, is there a pass-through? So, if the prices are falling, our margins are staying intact. I just want to understand, what's the reason behind that?
So, on the margin front, just a piece of correction. So, we had done Q1 of last year or the entire last year a margin of around 16.5% to 17%. Last quarter being at 17%, last quarter of last year. This year, first quarter, basis these prices, the margin have come down to 13%. Okay, at the current prices. As we are discussing the capacities and onboarding of the volume so far as CPVC and SIOP is concerned, these two are at a margin level of, independently at a margin level of 30% to 35%. Now, when these margins comes into play, and with some amount of reversal on the current prices, what we see, with the coal prices being stagnated as based on the current coal price index, we think that our margin steady state would be on 20%, not of 20%. And we cannot say which quarter or which year this will. The endeavor is that we see a margin of around 20% in FY25.
All right, that is very encouraging. But for FY24, do we expect to at least maintain last year's margins? How is our cost structure? Are we
our two businesses are top-line driven. One is caustic and the other is PVC. These are top-line driver businesses which does not fetch us margin. SIOP and CPVC are businesses which is the bottom line driver, and soda ash falls somewhere in between, which is your good a decent top line with a decent margin. SR obviously, synthetic rutile obviously is lower in the bracket in terms of total value of sales, and also the margins have been good over there because, as I told, it's kind of a speciality. Having said all of this and the various moving parts in terms of export demand, how it is going and stuff, our margins will be derived. We have to focus on all the businesses to drive both our top line as well as our bottom line. Margin will be a derivation which will come out. Okay, and obviously there are our interest in having pushing PVC. Obviously, we do it to the max, and caustic as well, because these are basically cash cows, which gives us cash much earlier. So we have to also see and balance our working capital and the cash conversion cycle. So having said this, we will obviously try to focus on all the business with the given prices, and margin would be a derived number at the end of the quarter. We are not driven by margin, we are driven by absolute EBITDA, and the cash flow will be driven by the commodities, which specifically PVC and caustic.
Correct, got it. So, for FY24, are we expecting the revenues of FY23 to hold up? as per current scenario?
No, I don't think so. This year obviously would be very bad because the average price of caustic last year was to the tune of 50,000 rupees. We are selling caustic today at 33,000 with a negative bias on the pricing as we are talking in this quarter. That's a 1 lakh ton capacity where the prices almost on an average basis would be 60% down, or would be 40-45% down, I'm sorry. PVC, obviously, we were selling last year at around, at an average, at around 95,000 rupees. Now quarter one, we are selling at 75,000 rupees. That's also, 1 lakh ton capacity. These are the two volume drivers. So in no case, we obviously, we would be able to meet the numbers of top line as we achieved last year. What we are not focusing on, the top line is not what we are focusing on. We are focusing on the absolute EBITDA. We recorded a 430 crores of EBITDA last year. That's where the deliberation is as how best we can drive and increase the absolute EBITDA for the company so far as FY24 is concerned.
So, are we expecting to hold up that EBITDA level, or, what are your...
30 crore of last year's EBITDA looks practically impossible with the prices we have today. And with the first quarter permanent loss in terms of capacity underutilization of soda ash and continue to quarter two. So, number what we would look next year would be around 300 crores, and north of that, that's what internally we are targeting.
All right. So, you're confident of 300 crores this year, FY24?
So, of 55 crores is quarter one. We are targeting in the internally in the boardroom. We are discussing a number of 300 crores. Given these prices being there, basically if the price goes up, we are committed to produce and sell more volumes. If the prices go up, it will obviously show up in the financials.
All right. Perfect. That's all from my side. Thank you and all the best.
Thank you. We have the next question from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Namaskar, sir. And,
Namaskar.
Thank you for answering, sir, all the questions in detail, sir. Sir, you spoke about firstly the soda ash market, sir, that currently the large players are facing difficulty in selling. So if you could just give outline what has led to this glut in soda ash market and what's the way forward going ahead?
Well, there are two things. During the monsoon, there is always a little slowdown in the consumption of soda ash because the detergent industry is not running to its full capacity. Because there is water everywhere, people are not washing the clothes. So that is one of the reasons. Secondly, the Chinese economy has resulted in excess imports in India, rather exports in India at very depressed prices. And that is the reason the soda ash has seen this glut in the country. According to me, Russia had built up some stocks of soda ash, which unfortunately they could not export to any part of the world because there is an embargo from Europe, from US, everywhere. So whatever was their surplus, it has already come to India, and I think all their stocks are exhausted. So one was dumping by Russia, which was a one-time scenario. The economy conditions being very poor, the consumption of various commodities being very poor in China resulted in drop in the prices and excess exports from China. These are the main two reasons that we saw the slowdown in the soda ash in India.
Sir, do you have the import numbers for the current?
I will tell you, India used to import about 45 to 50,000 tons of soda ash, and in the month of June, the imports were in the vicinity of almost 90,000 tons, and in the month of July, it was around 75 or 77,000 tons.
Okay. So So on a monthly basis, it was 40,000 and it has now moved up.
It used to be around 45 to 47,000 tons.
Okay.
In June saw a big jump in these imports because of the imports from Russia and to some extent from China. Now, Russia stock levels are normal, so we are seeing a little slowdown. Means there are not much of imports coming from Russia, but then China continues to export in India.
And how is August looking, sir? And also, how are the realizations trending, sir, currently?
The realization, because these prices were very low, so the local industry had to drop its prices. And since the prices have already been in line with the international prices, the imports are not much now anymore. So things should start looking up in very near future.
Okay, so we are expecting a normal month of August in the vicinity of 50,000.
I'm talking about the imports. Okay?
Import part, yes, I'm only the imports, sir.
But then what has happened, because of such big imports, the traders have built up some good inventory with them. So till such time these inventories are cleared up, the markets will remain a little subdued, but then things should become normal in a month or by October, I think things should be more or less normal.
Because this is, I think, the reason that even in your case, it is a planned shutdown. Even other major player is also planning a planned shutdown in the month of September. So
you are absolutely right. You are absolutely right.
So in this case, the inventory part भी sir soaked up हो जाएगी.
You are right.
Sir, when we look at now the caustic soda story, sir, Amitabh sir, you were very correct last year when prices were at higher prices, and you cautioned us that these are not normal prices and we would be expecting average prices to trend lower.
Yeah.
So अभी caustic market कैसा आप देख रहे हैं, sir? Currently, I think so now the prices are below.
Continues to be very subdued. Again, the imports, as I told you, the China economy is not in a very good shape. The consumption of the various products which they manufacture, it is not being consumed. In any case, they have been a big exporter, but now the surpluses are huge in China. So they are exporting. What has happened? The caustic soda prices in Europe, which has seen a high of $1,000 plus, now they themselves are exporting around $300 and odd dollars. So international prices of caustic soda is pretty low, and I think maybe I wish I could predict, but I think in the next 2 months or 2-3 months, I don't see much of changes in the caustic soda prices. They will continue to remain subdued.
Right, sir. And chlorine negative क्या है sir market में अभी in the Western market? How is the chlorine prices trending?
Sorry, will you come again?
Sir, how are the chlorine prices trending, especially in the Western market?
Now, since what has happened, since the chlorine was negative, caustic was subdued, so I think the production has been adjusted by some of the manufacturers. Means per force, because they were not able to sell caustic soda, they were not able to sell chlorine. So chlorine has improved. When I say improved means it is not much of negative anymore on the chlorine front.
Okay, sir. And last point, sir, if I could add, sir, China में sir एक natural capacity there was expected. So have they ramped up the capacity? Some production was.
Off late they have not ramped up anything. It is only the previous capacities which are playing havoc in the market.
Okay, sir. And what have been the capacity? 5 million? Yeah, I'm coming in the queue, ma'am. 5 million is what they have commissioned, sir, your natural capacity, sir?
No, you are talking whose capacity?
The China capacity. The new capacity, I'm forgetting the region. They have one of their new capacity was expected in the month of July.
Unfortunately, you don't get any news from China.
Right, sir.
So it is very difficult for me to comment on that.
Correct, sir. It's a black box type story, sir.
Okay.
Sir, thank you, Amitabh ji, sir, for guiding us, and we hope for better times.
Yeah, we hope.
Yeah, just to add to what Sharad told, I think whatever news we have from China today is that China is in a deflationary scenario. Volumes of the products are going down. The government now only yesterday has second time reduced the interest rate to boost demand. Even such a scenario to continue, there will be no taker for the products produced in China, and there would be a continued pressure on export out of China, which means the imports in India would stay elevated. That's a worry, and this is that the price
movement and functions will play around.
Right, sir. Thank you once again.
Yep.
Thank you. A reminder to participants, you are requested to limit your questions to 2 during the initial round. We have the next question from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for the follow-up, sir. One is on the soda ash side. Would it be possible to just give a brief breakup of what industry we are contributing and what percentage?
Industries to which we are selling soda ash. Industries to which what we are selling soda ash. You see, we produce only light soda ash. We are not in heavy and dense soda ash. So our basic consumers are the detergent industry and the chemical industry.
Okay.
Because we are not a seller to the glass industry or very big waste silicate industry, which patronizes only the heavy soda ash. And we are only in the detergent segment and the chemical segment.
Got it. Thank you. And secondly, since we are already almost 45 days in this quarter, so could you just help us with the prices of different segments as on June and as of now, after this 45 days?
Prices have already been corrected of soda ash in the end of July. And I think that is all.
No, I mean, in other segments, I mean, caustic, SIOP, CPVC prices as on June and now with this 16th August.
The prices are a bit dynamic, but just to give you a flair, as far as told, soda ash prices, what we got an average realization of rupees 33,000 a ton has come down to sub 30,000. Still, we are finding it difficult to place the volumes into the market because of abundance of supply and inventory holding by our competitors. Caustic soda prices have anyway come down in the range of 30,000 rupees. Obviously, the respite has been the chlorine negative has gone out, but and the expected power prices reduction to bake in. PVC prices, we've seen certain firming up on an average prices, certain firming up the last 2 cycles of increase, very small ones though. CPVC prices, we don't see it getting changed much. However, it depends on the mix of compounding and resin. SIOP prices remains firm at the range of around 80 to 83,000. SR prices, we've seen a correction from our Q1 prices. However, the prices what we can get could only be, firmed up as and when we see the demand uptake from the SR happening. As of now, we are dealing with the sluggishness of the demand so far as our export products are concerned.
Okay. That's it from my side. Thank you very much.
Thank you. We have the next question from the line of Nikunj Raj, an investor. Please go ahead.
Yeah, thank you for the opportunity. In our energy requirement, what would be the capacity of the captive power plant?
56 megawatts.
Okay, so that is good enough for the capacity, the internal energy requirement, or is it something that we get from the grid also?
Take care of the future expansion. So at present, our net consumption is not more than 44 megawatts.
Okay, and last quarter
demand for another 12 megawatts. So we have available power even to take care of our future power needs.
Okay, and in terms of the power cost per unit, how much it would be for the Q1 FY24?
It would be maybe south of 10 rupees.
Oh, 10 rupees?
Yes.
Okay. So what do you think, in the Q2 it will be, considering the coal prices cooling off?
Cooling off is, the thing is, what you buy today, you are not going to consume tomorrow. That's always going to be a lag effect. So we feel that for Q2, the power price reduction may not be more than ₹1. And Q3 onwards, we will see power cost coming to maybe sub 8 rupees, maybe 7.5 rupees.
Okay. And the total capacity of the CPVC will be around 20,800, right? After the expansion?
Yes. 22,000 tons you can take.
22,000.
Yeah.
Okay. Thank you.
This capacity is on resin, but 22,000 would be
because the product
combination
of
product.
The more we sell a value-added product, we will be in a position to add more capacity.
Listen, earlier the mention was that the CPVC capacity is 10,800.
Yeah, 10,800 plus 10,000 is 20,800.
Okay.
Usually we convert 25 to 30% of the resin into compound, which is expected to grow.
Okay.
So if that happens, for every ton of compound, we will need only 0.85 tons of resin. So the capacity.
So the volume will go up. The capacity is in resin terms. If we do more of compounding, the absolute volume added up, compound and resin in tonnage would be more than 10,800, 20,800.
Okay, so basically the current capacity utilization, as you have specified, is around 108%. So
that's because of the resin capacity versus the compound and resin added up, or when we define 10,800, we take a standard compounding. If you do actual compounding more than the standard compounding, your volume goes up and the capacity utilization shows above 100%. And vice versa.
Okay. Thank you.
Yeah, thank you.
Thank you. Ladies and gentlemen, that was the last question, and I would like to hand the conference back to the management for closing comments. Please go ahead.
Thank you, everyone, for participating in our earnings call. I hope we were able to answer the questions to your satisfaction. If you have any further questions or would like to know more about our company, please reach out to our investment relations managers. That's Valorum Advisors. Thank you, everyone, and stay safe.
Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of DCW Ltd and Valorum Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.